What's up, everybody? Thank you for tuning in to another episode of the CPA Zone, the podcast where we discuss tax strategies and accounting tips for entrepreneurs and real estate investors. My name is Ryan Pulis, and our company, the Pulis Group, offers tax planning and advisory services for entrepreneurs like you. Whether it's bookkeeping, tax planning, or CFO services that you're looking for, we've got you covered. What's up, everybody? Ryan Pulis here with another episode of the CPA Zone, brought to you by the Pulis Group. Today, we're going to dive into the auto deduction and consider what your options are when taking this deduction. So I get asked all the time, what's better to use for me? The actual method or the mileage method? And as with most things tax related, the answer is it depends. Generally, in most cases, standard mileage is going to give you the most bang for your buck over the long term. Now, if you buy a vehicle for your business that's 100% business use and not used by one of the owners, you'll typically want to use the actual method. So think like a pickup truck used by an employee of your construction business. The standard mileage rate it's a fixed rate the IRS gives us every year. So for 2024, it's 67 cents per mile. This is a fixed deduction that really covers everything for your car. Other than parking and tolls are always separate. But that fixed 67 cents per mile is going to cover your main expenses like fuel, repairs, maintenance on the vehicle, your car payments, etc. No depreciation deduction, no write-off for these. So just as an example, let's say you drive your car 15,000 miles during the year and 10,000 of those miles are for business. The mileage rate is going to give you a deduction of $6,700, 67 cents times 10,000 business miles. The actual method allows you to write off the business portion of your actual costs, so fuel, repairs, maintenance, and then you also take depreciation, assuming you own the vehicle. If you lease the vehicle, then you can deduct the business portion of your lease payments. Now, the business portion is determined by taking the business miles driven for the year divided by the total miles driven for the year. So again, let's say you drove your car 15,000 miles during the year, 10,000 were for business, then and you're going to take the actual method or use the actual method this time, then you would take 10,000 business miles divided by 15,000 total miles, and that gives you 67%, which will deduct your actual costs. So if you spend $1,000 on gas, the business portion is going to be $670. Pretty straightforward. Now, when a vehicle is used by a business owner, the IRS knows there's a tendency for personal use of that same vehicle. That's why you must keep a mileage log that tracks business, personal, and commuting miles. Commuting miles are not considered business miles. So when you wake up in the morning and leave your house and you drive to the first business location of the day, that's going to be your commute. Those are not business miles. Unless you have a home office, which we'll touch on again shortly. Now, you must keep your mileage log, whether you're taking the mileage method or if you're using the actual method. In either case, you have to track your miles. A lot of people seem to think that you only need to track miles if you use the mileage rate, which is incorrect. You have to have a mileage log under either method. Then, if you're using the actual method, you have to track your miles and also keep receipts for the various expenses you're going to deduct a portion of, like your gas and your repairs. So there's a bit more record keeping involved with the actual method. Your log can be a written log in a notebook with a pen or pencil. You can track it in Excel, or the best method is to use a mileage app. Plenty of them out there. QuickBooks Online has its own mileage app. There's a MileIQ. So we've already mentioned that generally the mileage method is going to give you the best deduction over the long term. That's simply because, for most people drive a fair amount of miles during the year, and they don't drive very expensive cars. So, I guess if you look at recent car prices here in summer 2024, then it seems like everything's really expensive right now. But generally, most people aren't driving really expensive cars for work. Now, just here's some general rules of thumb. If you put a lot of miles on your car and it's not an expensive car, the mileage method's typically going to be your best bet. If you do not drive many miles and the car is expensive, then typically the actual method is going to be best for you. What if you're somewhere in between? Let's say you have an average price car and you drive an average number of miles, not a whole lot, but not very few either. And you'll probably want to run the calculations both ways and decide what's going to be the best for you. Typically, the more business use you have as a percentage of total miles, the more likely the actual method will work for you. Now, once you choose, you're generally stuck using that method as long as you're using that vehicle. If you buy a new vehicle, you can start all over and choose again. But typically, once you pick, you're stuck using that. So keep that in mind. Now, as we briefly mentioned a few minutes ago, if you have a home office, you can really enhance your auto deduction. Because remember, commuting miles are considered personal. They're not business miles. But if your commute is from your bed to your home office in your house every day, then when you leave for that first trip that's business related, you're logging business miles. That's another great reason why you should have a home office. Now, to summarize, which method is typically best, the mileage or the actual method? It's going to be determined by the cost of your car and the amount of miles you drive during the year. Lower cost with high miles, mileage method is going to be better. An expensive car with low miles, the actual method will be better. And if you're somewhere in between, run it both ways and see what's going to work best for you. And always remember to keep your mileage log. Without the log, the IRS can throw out your entire deduction. So that about does it for today in our podcast on auto deduction. If you found value in this episode, please leave a 5-star review or hit the like and subscribe button. And until next time, have a great day. So that about does it for this episode of the CPA Zone. Thanks for listening, and I hope you found something valuable that you can take away. We are taking on new clients, and if you'd like to work with us, then go to our website and fill out the client intake form on our contact page. This can be found at thepulisgroup.com/contact. That's THEPULICEGROUP.com/contact.